One of the most common real estate legal matters today is not reviewing purchase agreements or helping with title work or helping people close and buy their homes. It's, can you help me cancel my real estate contract and get my deposit back? I'm a licensed attorney. Now, I don't work as an attorney day to day, but I have a service where I refer people to good attorneys because over the years, I have worked with so many attorneys. Some of them are really bad, some of them are really good, and I built this network of good attorneys. And now I have this service where if people want legal work, they can just fill out a form and then my team will refer you to a good attorney at no cost. And one of the things that I realized over the last couple months is that one of the most common real estate matters that we're getting now is not, can you help me close this home? It's, can you help me get out of this contract? I put $15,000 down in deposit, in earnest money deposit to buy this home. Now I don't want to get this home. Can you help me get my $15,000 back? When I talked to one of my attorney partners, he said the exact same thing, that they've been seeing a big uptick of people trying to get their deposit back on homes that they put money on because now they just don't want to buy the home. Now, the answer, in case you're wondering, isn't so straightforward. It's going to depend on a lot of different factors, like where you live, what the contract says, and a bunch of other things. So this is where you want to have a good attorney on your side if that is something that you're facing. That way they can hopefully help you get that money back. It's not always guaranteed, but it's going to depend on all the things that I just talked about. But on a real estate level, you can really start to see how the housing market has changed over the last 6 to 12 months. And the data confirms this. About 15% of home contracts are being canceled right now across the board. And Pulte, one of the largest home developers, in their last earnings report, they said that about 24% of their new homes were canceled in Q3 of 2022. Now, if you do need an attorney, and it doesn't have to be a real estate attorney, it could be any kind of attorney, whether it's a business attorney, an IP attorney, an estate planning attorney, a bankruptcy attorney, whatever. If you want to be referred to a good attorney in my network, you can just fill out the form down in the description below. It's at no cost to you, and somebody from my team will refer you to an attorney in my network. And since I am a licensed attorney, I do got to give you my legal disclaimer, which is that although you don't pay me, if I am compensated, it will be by the law firm and not you. But the shift in the housing market really shouldn't come as that big of a surprise, especially if you consider how much mortgage rates have grown this year. Like, take a look at this Time magazine article from the beginning part of 2022. The title is, Mortgage Rates Have Jumped to 3.4%. It's the highest they've been since 2020. What's coming next? Then if we fast forward to a little bit later in 2022, now you can read this headline. Home buyers are having a coming to Jesus moment as mortgage rates now top 7%. We went from seeing mortgage rates jump to new highs at around 3.5% in the beginning part of the year to then having a Jesus moment towards the end of 2022. It doesn't really get much more intense than that. But what's been happening on the legal side is people are entering into contracts to buy this, for example, $500,000 home. And when they entered into the contract, mortgage rates were around 5% a couple months ago. So they thought that they're going to buy the home at a 5% mortgage. You put down 10%, so you're borrowing $450,000, and your monthly payments would be just over $2,400 a month, right around $2,400. Well, now you get closer and closer to the closing date. Now, mortgage rates have jumped up past 7%, but if we just assume mortgage rates are 7%, well, now you got to borrow the same amount of money, that $450,000, assuming you're putting down 10%. But now your payments have jumped up to $3,000 a month, just from the time you entered into contract to when you get to closing. And now people are saying, wait, I was not expecting putting an extra $600 a month towards my mortgage payment. I mean, I would have just bought a bigger home if I wanted to spend an extra $600 a month. And this is why people are saying, I want to back out. Now, some people are just sacrificing their deposits. Other people are trying to fight to get their deposits back. And you can start to see where now people are saying, I wasn't expecting this and I can't afford to pay this extra $600 a month for this home. There's two things that I want you to understand here. One is, what are interest rates and mortgage rates going to be in the future? And second is, what is going to be the effect of these higher interest rates? On the first topic of what are interest rates going to be in the future, well, this ultimately is going to come down to the Federal Reserve Bank, which is the entity that determines what happens to interest rates. And the Fed is currently working to fight inflation. And until inflation comes down, They say that they're going to continue raising interest rates. So we recently, in the beginning part of November, saw a big Federal Reserve Bank interest rate hike, and they're saying that they're going to continue raising interest rates until inflation becomes much more manageable, around 2%. So that's what they say. Does that mean that that's going to be actually what happens? Not necessarily, but they're saying that they're going to continue raising interest rates until inflation comes down. And as of today, inflation is still much higher than 2%. So potentially, if the Fed stays true to their word, they will continue raising interest rates until we see inflation come down. Now, there's also a chance that they could pivot and they could say, well, now our economy is struggling, our housing market is breaking, and we need to now cut interest rates as a way to stimulate the housing market. That's a potential, but this is where you want to keep all eyes on the Federal Reserve Bank. The second question is, what is going to be the impact of higher mortgage rates? And this is where you got to understand that while mortgage rates keep going higher, the absorption of the higher interest rates hasn't really hit full effect yet. Like, people are buying homes thinking that they'd be able to get a 5% mortgage, and now they're having to turn away because now it's a 7% mortgage. And as people are getting used to the higher mortgage rates, interest rates keep going higher. And this is where you have to understand that the impact of higher interest rates and higher mortgage rates doesn't happen instantaneously. It takes time. Like, it takes time for the higher interest rates and mortgage rates to get absorbed, not just into the housing market, but into the general economy. And this is something that could take 3, 6, or 9 months to see the full effect of the higher interest rates and mortgage rates, because then people are going to go shop and they're going to say, oof, I can't afford a $500,000 home anymore. I got to look a little bit smaller. But the seller isn't going to just start changing their price. They're going to say, oh, I'll just hold off a little bit. I'll keep my home on market a little bit longer. We will keep it at this price for another 2 months, because the seller doesn't want to cut their price. And so it takes time now for less and less buyers to be there, for then the seller to say, all right, I'm going to give in. I'm going to cut my price by $10,000. And if they can't sell it at now $490, then maybe they cut it to $480. So for home prices to come down, it takes a lot longer than home prices to go up. And this is where you have to look at the absorption rate of higher interest rates. And this is one of those things that very few people talk about, but this is one of those things that where now you want to be a little bit more educated and understand that the impact of 7% mortgage rates isn't there yet, because the only thing that that's doing is affecting the people that are buying the home, but it hasn't affected the prices yet. And so as interest rates keep going up, that's going to continue to affect the prices of homes, but that's going to take time for that absorption rate to happen. Now, this is one of the things that we do cover on Market Briefs, my free financial newsletter. If you haven't joined Market Briefs yet, I highly recommend you do that. And I got that link for you also down in the description, or you can go to briefs.co/market.
Recessions create more millionaires than any other time, like you said, because when you have a recession, a market crash, people get scared and then they sell their assets. What's an asset? Stocks, real estate, crypto, gold. It can be any type of investment depending on what the crash is, what the recession is about. And that then creates a buying opportunity for somebody who has access to cash or capital and somebody who is financially educated.